Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for the Precious Metals and Critical Minerals Conference. Our next presentation of the day is from Astra Exploration. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Brian Miller, Chief Executive Officer and Director of Astra Exploration, which trades on the OTCQB venture market under the symbol ATEPF and on the TSXV under the symbol ASTR. Welcome, Brian.
Thanks, Greg. Appreciate being here. It's a good opportunity. I'd just like to thank everybody for joining today. As Greg said, my name is Brian Miller. I'm the CEO, Director, and Co-founder of Astra Exploration. We are a junior exploration company focused on high-grade gold and silver development in Argentina and Chile. Standard cautionary statement. This is on our website. I do encourage you to read it. Typically, when I do this, I keep things focused on the items that are specific to Astra, what it is about Astra that makes it a compelling investment opportunity. But recently, I've been asked multiple times to highlight a little bit about the macro conditions, why I'm excited about Astra specifically in this time based on the current market environment. So I will spend just a moment talking about that because it is important context and it does play into our strategy. Astra is a relatively new company, 5 years in the making. It was created in 2020 from the ground up. The last 5 years has been all about positioning. We believe that there was a bull market developing that was quite likely to rival anything that we'd seen previously. So it's been a kind of a long, boring process and sometimes grueling process of positioning, but it can be boring, but it's like bankruptcy, but a whole bunch more fun. This stuff happens slowly then suddenly. And this last year was a transformational year for Astra, and we are thrilled about the position that we're in. But talking about the current market conditions, obviously a precious metals bull market underway, particularly the last couple of years, metals prices has performed very well. And the things that are driving that are very much in force and effect, primarily central banks purchasing gold worldwide on a scale that we have not ever seen perhaps. And governments now acknowledging the need to source and control the production and refinement of precious and critical metals is driving policy. And interestingly, here in the U.S., we've recently seen silver added to the critical metals list. Notably, recently, Tether was a major purchaser of gold bullion. These people tend to be closest to the information, and I think actions speak louder than words in that regard. Global debt continues to soar, and particularly government debt. This current cycle right now is completely being dominated by fiscal policy. Investor allocation in precious metals and mining is still low as a percentage of portfolio allocation. And micro and small cap companies tend to be the last ones to re-rate in these cycles, but tend to re-rate most aggressively. And that's the category where Astra is. We're about a $50 to $60 million market cap, very well positioned with a portfolio of projects and a lot of catalyst events ahead. The team here, I won't go into too much detail, but the gentlemen on this slide here are all co-founders of mine that started Astra with me. Some of I knew when I started, some of them I didn't, but several major discoveries under their belts, including world-class deposits, several successful exits. They've created a ton of value for shareholders. Darcy Marood, one of my founding directors, led one of the teams that discovered El Peñon in Chile. He discovered the Mercedes mine in Mexico, and he helped build the Cerro Moro mine in Argentina, near where we're going to be talking about today. Charles Funk, CEO of Heliostar. He was also VP Exploration at Vizsla Silver when they discovered Napoleon at Panuco. Many of you have probably followed that story. They just recently put out a feasibility study that was absolutely spectacular. I don't know that I've ever seen numbers like that. David Caulfield was my mentor who got me started in the industry. He introduced me to several people. He was key in making introductions that really shaped the team. Roberto Alarcon was at Yamana with Darcy Marood for a number of years. He was their in-house counsel. He's a lawyer based in Santiago. He was in-house counsel for Homestake prior to that. This is the guy who knows how to get stuff done in South America. Mahesh Leonaj, our CFO, also CFO at Vizsla Silver, also previously worked in Argentina and Chile. And last but certainly not least, Diego Guido, our head of exploration, based in Buenos Aires, particularly sought out for his expertise in the Deseado Massif, globally recognized epithermal expert and credited with the discovery of the Pinguino silver deposit in Santa Cruz. I would put our capital structure up against any one of our peer groups. This has been some of the hardest work, but I think it's the most rewarding and most valuable. We've got a great roster of key shareholders led by Michael Gentili, owns 16% of the company. He's our largest shareholder and repeat investor. Mason Resources out of Toronto and several of its principals. Peter Demooney of Luca Mining, Simon Marcotte of Northern Superior Resources, just recently announced they're being acquired by IM Gold. Victor Cantori of Amex, Fahad Al-Tamimi, and some of the principals at Agentis Capital, Michael Gray and Scott Speed's group. Management and directors still own 13%. And collectively in that group that I mentioned is about 75% ownership. Cash position in October was just over $7 million. Very few warrants outstanding, all deep in the money, expire in April. We're seeing some of those exercise. So very tight capital structure. 3 projects in the portfolio, 2 in Chile, 1 in Argentina. We're only going to talk about Argentina today for the sake of time, but the ones in Chile, the 2 projects in Chile are very good projects. They'll add a lot of deep value to the portfolio. I think a high quality junior with a quality portfolio is going to be something of increasing value in the months and years ahead, particularly if the cycle continues to develop like we think and hope it will. The project at La Manchuria, we recently commenced a 10,000 meter drill program starting in October. We announced on Monday this week, we're about halfway through with that, and we'll complete the remainder of that in early 2026. But we're talking about southern Argentina in a region called the Deseado Massif in the province of Santa Cruz. It is one of the most mining-friendly provinces in Argentina. The region is one of the best endowed regions in the world for epithermal gold-silver. The La Manchuria project is located, you can see on the map with the red pennant. It's about 150 kilometers south of Cerro Negro. It's got very high grades near surface. We're literally talking about ounces of gold and kilograms of silver in multiple drill intercepts, open in all directions. We see the possibility for a multi-million ounce potential at the project within a 5,600 hectare land package, which is mostly unexplored. The preliminary metallurgy was favorable. Nearby mining infrastructure that desperately needs more ore to feed it. All of these things add up to an opportunity that's got potential for high grade, high margin, low capex asset with the potential for an abbreviated period to production. One of the things notable about the feasibility study with at Panuco was that it focused on all of these criteria. It had these criteria that drove the economics, and that's why that feasibility study from Vizsla was so impressive. I don't think I've ever seen a feasibility study with those kinds of numbers, but those are the factors that drive those numbers. Just taking a look at some of the M&A activity during the previous gold cycle, which finalized in about 2010, 2011, notably Goldcorp taking out Andean Resources for about a $3.4 billion transaction. That was for the Cerro Negro deposit, a spectacular discovery. 2 years later, Yamana bought Extori for the Cerro Moro deposit for $413 million. There's been limited investment in Argentina since then due to the political environment, but of course that's improved drastically. We're seeing a resurgence of investment back into the country. Zooming into the project here, again, 5,600 hectares, the boundary is in light blue. I want to draw your attention to the dark blue circle in the center of the map. That is where all of the drilling has previously been focused. It is the only area on the project that we see outcrop. But these drill intervals that you see listed to the left there in the dark print, those were drill intervals that were produced by previous explorers. The 2 in magenta were 2 highlight holes from our inaugural drill program in April of May of this year. The area is covered by volcanics, shallow volcanics. They're not very thick, but they do conceal the system so you don't see much of outcrop. That's what I've got outlined in pink here. The 2 areas circled in yellow, these are areas that we actually expanded the deposit into with our first drill program. The areas circled in white, these are areas on the project where we have observed evidence in the field that lead us to believe we may be able to expand the deposit into these areas. If we start expanding the system into these areas, I think this could be the potential game changer for this project. I'm going to talk a little bit about the drill results from the phase 1 program that was earlier this year, and I will talk about some of the stuff from phase 2 that we just released in the news release on Monday this week. So I'll bounce back and forth just a little bit between the two. But what I've got pulled up here, this is zoomed into that blue circle that I was just talking about. These are two areas, the main zone, which has target areas 1, 2, and 3 surrounding it, and the eastern zone, which has target area 4 surrounding it. The idea with this first program, it was a conceptual program, a proof of concept, and it was to extend the strike beyond what was previously known to the southeast. These two dark lines, these black hashed lines, represent faults. It was previously thought that this system was faulted off in both of these areas and that it didn't extend along strike. This was one of the most important targets in Diego's mind, as the west feeder, you can see in the upper left portion of this picture, east feeder, central feeder, and west feeder are basically 3 groups of veins. The west feeder is the area that hosts the thickest veins with the highest grades. With the first drill program, Diego did some step-out drilling here to the southeast, 75-meter step-out from previous drilling. He did intersect that high-grade vein at depth, about 160 meters down, 1.6 meters of 75-gram gold and 87-gram silver. Another 75-meter step-out to the southeast intersected 2 nice veins, but no grade. And the reason for that is, if you have a look at this long section here, so imagine you're standing on the inset map about on the letter E and you're looking toward that magenta line. That's represented by this long section. So southeast to your left and northwest to your right. But the pink unit and the yellow unit, these are the good host rocks that host the veins with the high grade. The green rock unit below that hosts veins, but it doesn't carry grade. And then the blue unit above it does not carry veins or grade. And so you can see how this mineralization is getting pinched as you go down to the southeast. Hole 107 hit the vein in the good host rocks, had high grade. Hole 110 hit the vein in the lower andesites, which carry the vein but no grade. What's interesting is it looks like from the drilling, the shape of this breccia, this blue area, looks to be opening up as you continue to the southeast. And it also suggests that in the geophysics, that's what we think we're looking at here to the left. So for sure, this thing is open along strike, but it also could be opening up in the vertical dimension as well, which would be a very, very good development for the project. Now I'm going to skip here to phase 2 drilling because I'm going to talk about the same area. This is, again, about that same location, this long section. And I do apologize to this, take a moment to try to explain this, but this long section is actually exactly backwards from the last one. So on this one, imagine you're standing down in the lower left corner of this map, kind of on the number 3, and you're looking to the northeast. So the left part of this diagram here is northwest, and to the right is southeast. We'll get those corrected here going forward. But this represents a 3D geophysical model that Diego created prior to this phase 2 drill program. The idea was that to put together a predictive model that actually showed the mineralized veins beneath surface. And Diego was able to source the raw data from a lot of geophysics over the last several decades. We got the permission to use those, and we did some ground mag ourselves and put them into a compilation that created this model, and it's actually worked quite well. Diego's really pleased with this. He thinks this is a powerful tool for locating veins, and so far has been proven with the holes that we've drilled. We've drilled 25 holes in this phase 2 program in this first half of it so far, and every one of them has hit veins and or veinlets. And so what this diagram clearly shows here is that the main zone, you can see the pink area, which is the good target, is much higher in the main zone than it is the other. And that confirms Diego's hypothesis that the blocks, that the faulting on this thing, the blocks to the northwest and to the southeast were actually dropped down, and those targets were further at depth. He drilled out a 150-meter step out to the northwest and intersected vein, extended the strike of the west feeder to the northwest, and it worked so well, he decided to put a hole into the southeast. This was much more of a, as he put it, a surgical target. Hole 139 to the southeast was a 100-meter step out from that hole 110 and drilled slightly higher elevation, and did hit that vein along strike. So Diego opened this up again along strike, We now have about 800 meters of strike length in what is so far what we understand to be one of the most important areas of the project. Skipping back now, going back and talking about phase 1 drilling. These are just some of the results, and I'll go over these for people who aren't yet familiar with the story, but hole 109 in area 2 here intersected some interesting grades and widths, nothing spectacular, but certainly worth following up. Hole 108, on the other hand, was our best hole, which was very, very spectacular. This intersected 4.4 meters of almost 12 gram gold and almost 2,800 grams silver. Almost all of that was in a 1.4 meter thick vein that carried 35 grams of gold and over 8,300 grams of silver. This is a cross section from that intersection. And so you'll see right down here, hole 108, you'll see the intersection. That was drilled 80 meters beneath a historical drill hole that had intersected a series of narrow veinlets near surface that had returned 2 meters of 2 gram gold and 300 grams silver. 80 meters beneath that, those veinlets coalesced into a thicker structure with high grade. This was a spectacular drill hole. This is a great follow-up drill target. Diego believed early on that these narrow veinlets did coalesce into thicker structures, but we didn't have the proof in the drill data because this project had been drilled shallowly. Most of the drilling here was between 100 to 150 meters depth. There was a few holes that approached, 170, 180 meters. So this was a great proof of concept program with some really good results. Hole 105 was a big step out to the southwest. This was a 150 meter step out from previous drilling. This intersected 2 meters at almost 7 gram gold and almost a half a kilo of silver. This is open in every direction. This is a very shallow drill hole. We had drill results from right near surface. Hole 113, further to the northwest. This was actually a really interesting hole that I think got overshadowed by the high grade results. And the reason is, you can see how closely it was drilled to this fault A. And this intersected 1.3 meters at 17 gram gold and 61 gram silver. What we weren't certain of is if this was an extension of the west feeder that had been offset by the fault, or if it was a new parallel structure to the west. And I think that right now we're leaning more towards an extension of the west feeder to the northwest. And if that's the case, that would be quite exciting. This is a cross section of hole 113. Again, you can see the hole where it cuts it right here. And it looks like those veinlets, those vein structures are coalescing as we go to depth, but we don't have drill information underneath that. Hole 112 was drilled underneath a historical hole that had some grade in it. We did intersect that structure at depth, 3 meters and almost 4 grams gold and 25 grams silver. But perhaps more importantly, at the top of that hole, we intersected new parallel structures that return an interval of 4 meters of 7.5 grams of gold and a trace of silver. Hole 114, another hole that had really good looking veins, but they didn't return grade. The reason was the same as hole 110. That vein was in the andesites right away. And even though those holes did not intersect grade, they may have been 2 of the most important holes we drilled in the program. Because if you look, this is a cross section. So here's the main zone area. The black circle here is hole 110. And then the eastern zone black circle is hole 114. The drill holes actually cut through the andesites and got into a new layer of favorable host rocks. So previously, the understanding was that the andesite started and then just went to the bowels of the earth. And once the drill bits hit the andesite, the show was over. You stopped drilling and that was it. But now what it looks like is instead of being one big continuous unit, that it was an intrusive unit that cut the strata and then spread out as sills in between the strata and sandwiched the good host rock in between. So this opens up a whole new opportunity at depth that's never been realized with this project prior to this drill program. I'm going to step back real quick and I'm going to talk about phase 2. This is another diagram that came out in the news release on Monday. The idea of the phase 2 program was to test the shallow targets and see if we could expand that laterally. So extend the strike and look for new parallel structures. And I think Diego did a terrific job of that. I mentioned that one of the things we're most excited about is the extension of the west feeder in the main zone, but some other key developments. The eastern zone, we established for the first time vein continuity there. We've got what looks to be a very serious vein. that's got a minimum of 200 meter strike and is confirmed at least 200 meter strike and extends down to about 150 meters depth. In addition to that, 350 meters to the northeast, we intersected another structure called the Road Zone. We only put 2 holes in there. That might be an interesting structure, but it's got different characteristics than the veins we've been seeing so far. So we thought it was a good idea to pause and get geochemistry back before we wasted drill meters or spent more drill meters on that area. But this white boundary here that shows the outline of that survey, that geophysical survey. And so we'll look to expand that survey prior to recommencing with drilling. We expect assays to be back. I'm still confident that we'll get at least preliminary results back in December. Most of the results will come in January and February. So it comes down to the question of why invest now? Why is now an attractive time to invest in mining and exploration, and why particularly at Astra? Well, as I mentioned, we've got an immediate catalyst event, 10,000 meters that we're halfway through right now. We're expecting assays this month and in January and February. And right now is a market opportunity. You can buy Astra, and I'm talking Canadian here, but you can buy Astra in the market for 50 or 55 cents. Whereas the financing that we just did in October was a bought deal financing with Cormark. We were able to do that at 62 cents without a warrant. We raised 6.25 million. The quality of people involved is one of the biggest things. Directors, management, and investors, value creators who are credited with multiple major discoveries, created a ton of value for shareholders with several successful exits. The capital structure is clean and tight, which equates and manifests itself as share price performance. You can see that over the last year. And this is an early opportunity in a project that's got potential for high margin, low capex, and an expedited timeline for production. And with that, I see that we've got several minutes for Q&A. I see several coming in here, so we'll just start with the first one. It says, over the next 3 to 5 years, do you envision funding advancement mainly through equity markets, strategic investors, or a formal partnership with a producer? And how does that choice impact current shareholders? Terrific question. At the end of the day, the decision we make is all weighed about whatever dilution we endure. Are we able to add much more value than the dilution? So do you seek that through a strategic partner? Do you continue to go to the equity markets? That would all depend on what the outlook of the market looked like and what the terms of the deal were. And this is why I think it's so important for management to have, number one, big ownership in the company, and number two, have real skin in the game. So that is one thing I'm very proud of, and it was by design. Board and management have significant ownership, and they've got a lot of real money invested, and it's money that leaves a mark if this thing fails. So that affects your day-to-day decisions, and we're quite well in alignment with that. So that's a very long-winded way of saying I don't know, but I would consider anything that I thought was a value-added transaction for Astra shareholders. Another question, between the $5 million bought deal announced in late September and the 6.25 million private placement that closed in early October, you now have roughly 7 million in cash in the balance sheet. What is your monthly or quarterly burn rate, and how many meters of drilling does this fund beyond the current program? So we only did one financing that was in October. We raised 6.25 million. That was the bought deal. And the financing prior to that, I believe, was in April or May, and that was just a $1 million top-up financing. So the last financing we did was 6.25. The cash position was just over 7 million. The all-in cost of drilling here for the first program we did was about $350 per meter US. And that was a true all-in cost, assays, camp, geologists, everything. The 10,000 meters, we think that with this program, we think we can do better on that cost. We're going to try to get that down a little bit more, but we've got enough money in the till right now to fund the 10,000 meters of drilling and then have some cash left over in the till, probably to get us close to through 2026 if we wouldn't do any more exploration at that point. How are you prioritizing dollars between La Manchuria, Pampa Paciencia, and Cerro Bio over the next 12 to 18 months, given that the offering documents state proceeds are primarily for La Manchuria? Great question. Mostly La Manchuria. We pivoted from Chile, not because we don't like those assets, we really do, but we believe that we could add much more value for less dilution at La Manchuria. Given the interest, the investment that we see flowing into Argentina in general, both from funds, investors, and mining companies, that's quite encouraging. And I think that that's as long as we continue to deliver results that show size and scalability and further potential at La Manchuria, that's where our focus is going to be. Now, having said that, I think that there is some work that we can do, and I'm not even talking about drilling, I'm talking about stuff like mapping and maybe some geophysics, so like $100,000 worth of work type of stuff that would produce some drill targets that would potentially introduce JV partners, interest JV partners on the Chilean assets. So we might consider doing some lighter work on some of that stuff, but overwhelmingly, the focus on the fund is going to Argentina at La Manchuria. Management and directors own about 13%, strategic and high net worth about 62%. How do you ensure sufficient trading liquidity and price discovery with only a 25% public float? Terrific question. My philosophy behind share structuring was that during times where the market interest was not there for exploration and corporate activity was low, it served shareholders, all shareholders best to keep the share structure tight. My two criteria for expanding the public float were, number one, if corporate activity picked up to the extent that we were producing good results and we had a path or a roadway in front of us, that we were going to be able to continue to do that consistently. And there was inbound interest in the greater retail space. So as those two things improve, then we'll increase the public float. Those two things has come to pass. And with this last financing that we did, raising this $6+ million, we increased that float. So we're probably, I don't know, loosely saying around 70 to 75%, and we'll continue to do that. And now, having said that as well, we can also increase the public float in our network as we see fit without raising more money. Great questions. There's a lot of them. I don't know if I'm going to get through them in time. How are you prioritizing the main zone versus eastern zone versus road zone in phase 2, and which of those has the clearest path to a first resource envelope? This is more of a Diego question, and to be perfectly honest, he is still processing a lot of what's coming out of the first half of phase 2. I imagine that the focus will still be on the main zone if we can continue, especially if we can continue to extend the strike of those feeders. Again, I would defer to Diego on this, but also it would be nice to, if this geophysical model really does work as well as it appears to be working, look to extend that to some other regional targets that look compelling to us in the field, and then maybe put a couple of test holes in some of those, because the marginal value here, the real needle mover is going to be to show significantly more scale and size potential. Which one of those has the clearest path to a first resource envelope? From what we see right now, most likely the main zone. If La Manchuria delivers, is your intent to remain an explorer and sell the asset, or to transition toward development while advancing Pampa Paciencia and Cerro Bio in parallel? Another great question. Our strategy with this is to develop this into an asset that we can sell, either sell the company or sell the asset. What we do well is explore and discover. Now, having said that, and not to muddle the message here, having said that, I'm a guy that sees a ton of value in optionality, but only if it's true optionality and it's not blue sky lip service. We are good at exploring and discovering. We have structured this deal such that that is our intent, is to divest the asset, develop to a certain stage. But within our network, we do have the know-how and the people that you could put together a mining team. So if it made more sense for Astra shareholders to put this down the road like a Vizsla and put it into production ourselves, we would consider that. But of course, we're considering that as shareholders because that's our big payday, is the Astra share position. So the short answer is I don't know, but we do have optionality on that front. I might have time. There's still a bunch of questions here. I'm just going down the list. You've highlighted analogies to Cerro Negro and other Deseado Massif deposits. What are the key geological differences that might limit a La Manchuria upside versus those analog? Boy, at the end of the day, if it's just, I mean, if it's not there, if the veins disappear, if they're faulted off, differences. La Manchuria is a narrow vein deposit. It's similar in that regard to, say, San Jose, which is north of Cerro Negro. But you look at the textures, you look at some of the vein formations, they're very similar to what you see at Cerro Negro. So it's hard saying. There's no perfect match for it, but there's certainly similarities that we see in other regional deposits. And there is something special about this area here that is very high grade, higher than most of the regions in the Massif. Okay, maybe the last question here, and then I'll have to go. If I don't get to your question, please do follow up with me. Best way to get in touch, by the way, before I get cut off here, there's email info@astra-exploration.com. That comes directly to me. Send me an email. I will respond if I don't get to your question. Our website, www.astra-exploration.com. Sign up for our newsletter. That's the best way to keep in touch with us. I see I am going over on time here, so I'm going to have to wrap it up. I'm not going to get to all the questions. There's still questions coming in. They're great, and I appreciate the engagement. So please do follow up with your questions, and we'll get those answered.